Tim with BIS Commodities, just taking a look at the week in review, this second week of March 16, and let's start out by taking a look at some of the ag commodities here. May corn closed just shy of 7 cents higher in the week at 365. May beans were able to push 17 cents higher this week, just short of 896 on that last trade. May wheat was up 15 cents this week, 476. April cattle was able to find $3.45 of strength this week at 139.80 as the closing trade. 71.82 the closing trade in April hogs. That's up just a hair over a buck on the week as well. Positive week there. The dollar looks as if it's going to close about a point or a buck lower on the week, somewhere around that 96.20 area as it's still trading. At the time of this broadcast, crude looks as if it's going to close up a little over $2 on the week as well, still trading at the time of this broadcast at that 38.50 area. Taking a look at some of the news items of the week, the main focal point this week as far as corn and soybeans were concerned was the monthly supply and demand report. And as the previous couple of reports, it was kind of a ho-hum report as well. The USDA punted on any type of changes ahead of the quarterly stocks and planning intentions report at the end of the month. But basically, we just left our corn balance sheet alone. We left the 1.837 billion bushel carryout in corn alone. No changes on the supply, obviously, and on the demand side of the equation. We did increase our carryout in soybeans to 460 million bushels. That's up 10 million from last month, and that was made to a reduction in the crush, soybean crush, as we are lagging last year at this point, and we are lagging the projections from a percentage standpoint of what we expect to crush this year too. So there is the thought process that we will see those crush numbers probably come down in reports, upcoming reports. Interesting that the USDA did leave the export number alone in the corn. There was some talk that we would see that export number cut maybe 10 million bushels or so as well, as we continue to lag the 5-year pace in corn exports at this point as far as a percentage. Wheat, we punted there as well. We left everything alone. Plenty of a carry out as far as wheat is concerned at 966 million bushels. The trade aside, we did see some strength this week. Beans were the big winner. We were able to bounce out above the trading range, making new highs for the year as far as 2016 and the contracts. And nothing really nothing out there as far as fundamentally focused. There is some concerns about the strikes in South America. That is more of a yearly thing than anything at this point. But I believe it's probably a short covering event and a technical trade as well, as the fund's been stale in here, covering their shorts after holding a heavy short position, and historically don't like to be short going into the planting season. Another reason for the strength, I think, in the soybean market this week is the currency in Brazil was gaining on the dollar. The real gained on the dollar this week. Strength in the real due to the concerns and or the ideas that maybe some of this corruption would come to a halt in the government down in Brazil. And interesting enough, with this strength, the Brazilian farmer probably shuts off selling. You're probably taking away some natural sellers to the marketplace as they sell it based on as much as currency valuation as they do the price of soybeans. So with that, we were able to close and pop through some key areas, some key resistant areas. Now the question is, can we hold these areas? Now, interesting enough, we did get a commitment to traders report in soybeans this afternoon, and we did buy back 38,000 of our managed shorts. So that leaves the managed money short around 42,000. Now this is a lagging contract, so this is through Tuesday of last week. So we suspect that we're actually closer to neutral than what we realized here. So it'll be real interesting and real important to to hold these highs, these nearby highs in the soybean contracts. Corn is a dog stuck in the mud. The report, we didn't see much reaction upon the release of the numbers. Not a lot of news out there this week. The managed money actually added to their short position again through Tuesday of this week, 25,000 extra shorts. That leaves them just shy of 230,000 short in the managed funds on corn futures. Pretty big short out there. I'm probably getting tough to push this thing lower. Maybe we can get some short covering rallies. We were able to close higher on the week. But corn's still been a dog compared to beans and or wheat. We did see the wheat shorts cut little as well, 15,000 on the week. They're short 92,000. So we are seeing some of that managed short pair back a little bit as we roll into planting season. South America's harvest continuing to progress. Brazil's probably over that 50% mark right now. Argentina's digging in a good start. As of right now, most analysts are holding to increasing projections as far as production out there. CONAB, the USDA version of Brazil, upped their estimates for both corn and beans down there. The safrinha corn crop is getting planted in a timely fashion ahead of next year's pace, and weather at this point seems favorable for them. As we approach planting season, or getting close to it up here in the continental United States, we're starting to focus a little bit more on weather. They've had a very wet spring so far in the deep south. Louisiana, Arkansas, some of those areas are getting a little bit behind as far as early planting is concerned. And there is concern in the winter wheat country over there in the far southwest part of the country as far as dryness. There is some rain in that extended forecast. We'll see if that comes to hold true. We'll see come Sunday night then if we're able to hold these levels and maybe bounce a little bit more in this corn. Taking a look at the livestock markets, cash cattle was a thin trade so far this week. Early in the week, we heard some 136 cash in Texas on very light volume. And we're hearing some whispers out there, a better cash trade. Obviously, futures broke through a major resistance area, pushing through to new highs here in the April contract. The futures trade is expecting a much stronger cash, trying to break out that 138 high cash trade this week. We may not hear of a cash trade yet today. Last week they traded on Saturday, and maybe to Saturday before we hear a cash trade as well. But certainly the futures market is expecting a stronger cash trade. Boxes were stronger all week. We did see them back off $1 today. They did close at $2.24 in the choice, $2.15 in the select. Hogs futures this week were able to break through to new contract highs, June, July, August, up in areas that probably warrant some price protection for hedgers out there, as feeding margins look as if you can lock in a profit. Probably an opportunity to take advantage of those prices at this point. Cash traded stronger early in the week, fell off here today. But again, I think you're probably at an area that warrants some protection. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525, or check us out on the web at biscommodities.com.